And investors want to know if today's strong jobs report will alter the Federal Reserve's thinking on interest rates. Today, Steve Liesman spoke to a number of Fed officials to find out. He reports for us tonight from Stanford, California.
A very strong jobs report and a strong decline in the unemployment rate, but not a strong reaction from Federal Reserve officials. CNBC interviewed 3 Fed presidents at the Hoover Institution Monetary Policy Conference, and all thought policy was pretty much in a good place right now, and they're not moved to hike rates because of the stronger growth or cut rates because of low inflation.
The signal of low inflation was that growth was going down, but there's no evidence of that. The economy is in a really strong place. So I'm willing to be patient, right, on the inflation on the downside as well as inflation on the upside.
Dallas Fed President Robert Kaplan agrees that the policy rate is in a good place and sees growth this year between 2–2.5%. That would be weaker than the 3% of last year. And he does have some concerns about global growth, which is a reason he and other Fed officials are not in any hurry to raise rates.
I worry that weak growth outside the United States, particularly in Europe, we're not immune to it, and some of that is spilling over. And particularly that's the case because almost 50% of S&P 500 earnings and profits come from outside the United States. So I think that's a bigger issue that I think will have some muting effect on GDP growth here.
One Fed official, St. Louis Fed President Jim Bullard, does believe that rates may be too high, but again, he's in no hurry to cut.
I think we're a little tight on the funds rate, not too much, but a little bit tight. I think the global safe real interest rate short term is about 0. If you add the 2% inflation target to that, you get to 2%. We're at 240. Sounds a little bit tight to me.
And so the consistent message from Fed officials is one of patience, waiting until inflation either rises and forces them to raise rates, or it falls along with weaker growth and forces rate cuts. But it could be months before that happens. For Nightly Business Report, I'm Steve Liesman in Stanford, California.